Hey guys, welcome to my show. I'm Ash Ellis, and today I want to talk to you a little bit about the housing market and what's going on across Canada. Well, let's start a little bit with the appreciation. We're sitting in the middle of February now, and we've seen appreciation in various cities exceeding crazy numbers. In the GTA, the whole GTA, we've seen about 15% appreciation in prices. In the Hamiltons, we have seen about 27% appreciation. In the Sudburys and the Windsors of the world, we're seeing over 40% appreciation. This is crazy numbers. So what is going on? Why are the markets behaving like this? And that's what we're going to talk about in today's video. Supply and demand. Right now, we're sitting in an environment where there's low amount of inventory, a low amount of houses for sale. And as a result, we're seeing multiple offers upon multiple offers, and this is tending to drive house prices up. We're also sitting in a low interest rate environment. I've heard of clients getting interest rates in the 1.5s, 1.75. A low interest rate environment allows borrowers to borrow more money, and it's also cheaper for them to go out into the market and obtain mortgages. And the other factor that's contributing to a high price appreciation has to do with inflation. In inflationary times, we see the price of assets increase. And in inflationary times, the best place to stay invested is hard assets similar to gold, Bitcoin, silver, and other hard assets like real estate. And if we look at the trends of these big hard assets, we will notice that in the last few months since COVID, all of these assets have continued to appreciate. Now, I could get into economic theory and talk about how governments pumping money and liquidity into the economy contributes to inflation, but I'm not going to get into that in this short video. A simple Google search will tell you that, all of this liquidity coming into the system is contributing to inflation. And that's why prices on houses are also being pushed up. I mean, look at the smartest people in the world, Warren Buffett. In the last 8 months, he purchased Barrick Gold, a gold mining company. Look at the performance of Bitcoin. A few months ago, it was trading at $10,000 or $20,000 a Bitcoin. And today it's trading at $50,000 or $60,000 today, last time I checked. Crazy stuff. Same thing with the housing market. A year ago today, as I mentioned at the beginning of the video, house prices have appreciated anywhere from 15 to 40% in the surrounding areas. So let's talk about the flip side. Could the bubble pop? Absolutely. There is a possibility of that. Now, for that to happen, a couple factors have to take into place. One, interest rates should possibly start to rise. The forecast for the Bank of Canada talks about them holding rates or possibly micro cuts going out into the next 2 years. So that's unlikely to happen when governments are looking to stimulate the economy by keeping borrowing levels low so businesses can use that money to go back and reinvest. So I don't see that happening. Another thing that could spook markets could be if policymakers implement something with mortgages that could in fact throw the market for a loop. For example, going back to 2017 and 18, when policymakers introduced the foreign government tax, the foreign buyer tax, and that spooked the market, and we saw a 10% dip in prices. There's talk of getting rid of the capital gains tax. There's talk of getting rid of the principal home, when you sell your principal home, it all being tax-free. There's a lot of stuff out there. And if something like that were to pass, that could spook the market as well. But that's it for now. I wish you guys a wonderful week and take care. Have a good day.